Ford Motor Company began the new decade with optimism as it emerged from the fundamental corporate redesign to compete in the era of smart vehicles and clean energy. The automaker is investing heavily in new technologies to keep pace with competitors in the markets for autonomous vehicles, ride-sharing, and electric cars. Ford stock is moving higher after a prolonged downtrend. Today, we'll tell you why Ford Motor stock is a buy right now. Number 7. Ford delivers record EV sales. Ford in early March reported record electric vehicle sales in February, the first full month of sales for the Mustang Mach-E. The electric crossover vehicle put a dent into Tesla's Model Y U.S. market share. Morgan Stanley analysts said in a note to investors on March 2nd that the Ford Mustang Mach-E stole EV share from Tesla last month. Tesla's share fell to 69% from 81% the prior year, the Morgan Stanley analyst wrote. The Ford Mustang Mach-E accounted for nearly 100% of the share loss, they said. The automaker sold 3,739 Mustang Mach-E electric vehicles. Sales of the hybrid F-150 truck also boosted EV and hybrid sales last month to 9,267 units. That number is up 56% from a year ago. Ford stock is performing much better than Tesla stock as of late. Number 6. Ford earnings. Looking ahead to Ford's 2021 performance, the outlook is much brighter. Management sees a major improvement in operating earnings from $2.8 billion to a range of $8 billion to $9 billion. The turnaround is expected to be driven by not only the absence of COVID-19 shutdowns, but improving industry trends in new vehicle sales. Car buyers' reception of Ford's latest launches, Bronco Sport, Mustang Mach-E, and the new F-150, will have a material impact on 2021 results. On February 4th, Ford reported a Q4 earnings surprise, lifting shares. The automaker's EPS rocketed 183% to 34 cents on revenue of $33.2 billion. Analysts expected Ford's quarterly report to reflect a loss of 7 cents a share on revenue of $32.89 billion. Ford stock is rebounding thanks in part to new strategic investments in the electric vehicle space. CEO James Farley said the company will accelerate those investments in the coming quarter. Ford plans to pump $29 billion into electric and self-driving car technology through 2025. The transformation of Ford is happening, and so is our leadership of the EV revolution and development of autonomous driving, Farley said in a February 4th earnings statement. We are accelerating all our plans, breaking constraints, increasing battery capacity, improving cost, and getting more electric vehicles into our product cycle plan, he said. Number 5. Google partnership lifts Ford stock. Ford stock gained 2.9% on February 1st after CEO James Farley announced the 117-year-old automaker is partnering with tech giant Google. The Michigan-based car maker and Alphabet-owned company will form a new collaborative group called Team Upshift. We're going to leverage the talent and assets of both companies to push the boundaries of Ford's transformation, Ford Motor wrote in a company blog post. This may include projects ranging from modernizing our plants through Vision AI, developing new retail experiences when buying a vehicle, creating new ownership offers based on connected vehicle data, and more. In addition to the joint venture, the deal will make Google the preferred cloud service for the Detroit automaker. Number 4. Argus analyst Bill Selesky raised his rating on Ford stock to buy from hold to set a new $14 price target for the stock. The upgrade isn't about electric vehicle launches or EV investment. Instead, the regular old car business is simply getting better. People are likely to buy more cars in 2021 than 2020, and that's good for Ford. ticker F. EVs seem to dominate all things cars these days, at least for investors. Several EV stocks Barron's tracks are up about 40% year to date on average. That's after rising roughly 575% in 2020. Both returns crush comparable numbers for the S&P 500. Ford plans to enter the EV arms race too, committing to spending roughly $20 billion in investments in EVs and autonomous driving technology between now and 2025. That's about as big a commitment, adjusted for size, as any other traditional automaker. Things are getting better for the car business. Our upgrade of Ford reflects our expectations for stronger consumer spending, helped by a new round of stimulus payments, low borrowing costs, and savings rates that have reached all-time highs, the analyst wrote in his Tuesday report. He raised his 2021 and 2022 earnings estimate to $1.08 from 70 cents. Number 3, Ford stock fundamental analysis. To determine whether Ford stock is a buy now, fundamental and technical analysis is key. The IBD stock checkup tool shows Ford stock has an IBD composite rating of 85 out of the best possible 99. The rating means Ford stock ranks very well versus all stocks in terms of the most important fundamental and technical stock picking criteria. Ford stock has an EPS rating of 75 out of 99, which compares quarterly and annual earnings per share growth with all other stocks. While that score could be better, it has improved since the last quarterly report. Ford has a spotty earnings track record, with many quarters of earnings declines over the past decade, but forward-looking estimates are pointing to growth ahead. The rankings place the car maker in the number 2 spot versus its automotive industry peers. Because of its huge run over the past year, a now damaged Tesla, TSLA, still holds the number 1 slot in IBD's auto manufacturing industry group, which is now 113 out of the 197 industry groups tracked by IBD. Stellantis, STLA, is ranked 3rd. Number 2, Ford stock technical analysis. Ford is hitting resistance at its 21-day line. In late February to early March, Ford stock broke out of a 3 weeks tight pattern with a still valid $12.14 entry and briefly ran up to $13.22 before pulling back. The 3 weeks tight entry offered existing shareholders the chance to add shares to their positions. It also was an opportunity for traders to initiate a position in this economic recovery play. Ford stock tested its 50-day and 10-week lines last week, but quickly rebounded. Investors could buy off the 10-week line, but whether the 10-week line or the old 3 weeks tight, investors might want to wait for shares to get back above the 21-day line before buying or adding shares. A move above the 21-day would also break a short downtrend in Ford stock's chart. Another bullish factor? Ford's relative strength rating has improved alongside the stock's share price gains. The RS rating for Ford stock is now an 87. That means Ford has outperformed 87% of all stocks over the past year. Elite growth stocks boast even higher scores, but this is a positive development for Ford. Ford's relative strength line, which measures price performance versus the S&P 500, has pulled back slightly, but is still near its highest level in about 20 months. It's important to note that Ford has underperformed the S&P 500 for the better part of the last decade, but looking at the monthly chart, Ford is now solidly above its 24-month moving average. Closes above that level for the past 4 months are a big step in the right direction. Number 1, Ford stock. A buy right now? Ford stock is dirt cheap compared to much hyped electric vehicle rivals like Tesla and NIO, making the company a good bet for investors who want to get in on the ground floor of this rapidly expanding opportunity. While the automaker has historically struggled with low margins, its compelling EV strategy and rock-bottom valuation make it a top choice for value-conscious investors. Ford stock is trying to break its long-term downtrend going back to 1999. Looking at the daily chart, shares are finding support at key levels as they make a big move off 2020 lows. As for the fundamentals, Ford sales and profits are rebounding. The company is moving more into electric vehicles too. However, chip shortages are a wild card for Ford and the entire auto industry. Those who bought the stock coming out of recent buy points are likely basing their purchases on strong 2021 estimates. Ford stock is a buy. Shares have pulled back within a 5% buy zone from a 3 weeks tight entry, as well as rebounding from the 10-week line. It's actionable now, though getting above the 21-day line would be a positive for Ford stock. So, while Ford is late to the EV and AV parties, they are better late than never. With the electric vehicle and autonomous vehicle markets forecast to reach $800 billion and $700 billion respectively by 2027, there remains plenty of opportunity for Ford to capture a significant slice of a combined $1.5 trillion global market. But while the road to growth is clear, Ford's financial picture remains murky. Of course, the company had to invest in these new growth areas to stay relevant in the rapidly evolving automotive industry, and that has entailed adding to its already hefty debt balance. At the end of 2020, it carried a $24 billion debt burden that will need to be addressed over time. And time will indeed be needed for Ford's core business to return to pre-pandemic levels, not to mention for its investments in EV and AV to bear fruit. Investors that jump in now would be doing so with the understanding that the restructuring still has a way to go. But taking that leap of faith here with a $1.50 addressable market opportunity in mind may put the investor in the driver's seat to some substantial long-term capital appreciation if Ford stock continues to recover. Do let us know in the comment, are you ready to invest in Ford stock? Please subscribe to the Stock Advisor. Thanks for watching.